What's up, guys? Welcome back to another update of my Canadian dividend investing portfolio series. So if you're new to the channel, first of all, welcome. What I do here is I basically buy and sell Canadian stocks on the Toronto Stock Exchange. I use Wealthsimple Trade and I track everything in this custom Google Sheet that I made. There's links for everything down in the description below if you'd like to try out the Google Sheet or Wealthsimple or anything like that. And welcome back to everyone else who is a subscriber or who has been watching these videos for a while. It's awesome to have you and awesome to see you guys down in the comments all the time. Still back here checking out my progress and seeing how things are going. So today we're looking at a stock value of around $67,700. We're up about $5,500 for a total gain of just under 9%. All nice numbers. Looking at a total yield here of around $2,669. I'm going to buy some stocks today. We're going to come back at the end and see how this has changed after we put in some money and buy some new stocks. Now, there's $100 cash in my account right now, and this is like some of this is just left over from whatever I was doing last time I was buying, and there's also some dividends in here that I have recently received, but I want to put in some of my own money as well, and we're going to do that here in Wealthsimple Trade. So I'm going to add in $350 of my own money. We're going to confirm those. And once that's in, I'm just going to jump back into the spreadsheet and first of all log the fact that I just made a deposit. So I'm going to come down here to the bottom and we're going to indicate this that we put this in the tax-free savings account for another $350 Canadian, and today is January 14th, 2022. So we're actually going to be spending $450 in this video, but I wanted to deposit the money during the video so you could see that $350 of this is my own money, and the other $100 is money that has come, through dividends and stuff. So that's how you actually see, like, I'm always reinvesting all the dividends that I get, and it starts becoming, like a reasonable amount of what I'm contributing into my new stocks that I'm buying. It's not all my own money. Then this is how you start building compounding effect and get that dividend snowball effect as you reinvest your money. So anyways, with that said, we're going to jump into the portfolio here and take a look at what I want to buy. And today, I've got it sorted right now for everything in the biggest percent by holding. You can see here that Ryokan is my biggest holding at the moment. A lot of real estate companies are actually making up the biggest ones, and yeah, everything else is just in there as well. I have been sorting it quite a lot this way, just kind of getting an idea of what the biggest winners and losers are. And I'm noticing down here there's a ton of utility companies that are down at the bottom that are pretty much smashed to bits, double-digit losses on these guys. And I think, you know what, that's okay. Some of these I'm just going to put more money in and kind of maybe try to reduce my average price on some of these positions while these stocks are so incredibly beat up compared to their recent prices. So to get started with the companies that I want to buy, the first one that I'm looking at here is NPI. This is Northland Power. Smashed to bits, and that's okay. If you look at their 5-year chart, overall, like since before COVID and stuff, they're doing all right, but they have just been really declining since, when was that? Like about a year ago. And I'm pretty sure these guys are just going to keep falling, but anyways, I'm going to start riding that wave all the way down. So I'm going to pick up 2 of these, and these are going to go into my tax-free savings account. So we're going to buy those on a market buy. It's going to be around $70. We're going to take those 2 shares. Okay, so the next thing that we want to do is pick up a couple of interjects. I've been holding off on these guys for a long time. They've just been chilling here, doing nothing in my account. But they're so far down that I think I'm like down 20% on this position. So I think now is time to throw in just a couple. So I'm going to buy just under $100 worth, I think. I'll pick up 5. And this should go into the tax-free savings account as well. Again, just under $100. I think that's good enough. I only previously owned 25 shares of these, so that's actually gonna like change my my average cost pretty noticeably once that goes through. See, already now we're down less than 18%. So when you only have a few shares and you buy in with such a discount, you really feel that difference. Okay, so the next one that I want to pick up is AQN. This is one of my bigger holdings actually, but they're also just really beat up at the moment. They're down 10% on my average price, and I want to take 5 of these guys as well. Again, probably a little bit less than $100 there. We're going to put that also into the tax-free savings account. Nice. And then got a couple more here that I was looking at. One of them is Hydro One. It is H. So if you just type the H, it's not enough for Wealthsimple to realize what you're looking for. But anyways, Hydro One, completely different story. They're just nice growth here in the last kind of couple of years. And with them, I just want to take 2. I'm actually up on this one, up 6%, and if you see here, they're doing pretty well. They have a slight little dip here, but I'm going to jump on and take 2 of those again into the tax-free savings account. Okay, the next one, I'm just kind of spreading it out all over utilities today. So the next one that I'm looking at here is EMA for Emera. These guys also in the green, up 10% on these guys, very nice. And these ones also have pretty nice growth going on, very similar to Hydro One. They're a bit more expensive, so I'm just going to take one of them, drop this into the tax-free savings account, and continue on. So the next one here too, I think the last one that I want to buy today is going to be Fortis. Fortis is also nice growth stock here, and again with a slight little dip here in the last few days. And this is the last one that I want to be putting into my tax-free savings account today. So we're going to buy that one on a market buy and hit confirm as well. Okay, cool. So we just want to jump back into the spreadsheet then and drop these into the transactions tab and pretty much just write them exactly as I see in Wealthsimple Trade, where I have the exact quantity and the price paid and the actual price of the market buy. And once I'm satisfied that all of the totals are exactly correct to the cent, then the last thing to do is just check in the summary tab and take a look here at the estimated annual dividend income. And at the beginning of the video, this is around $2,669, and now we're looking at $2,685 per year. So that's an increase of what, like $16, I think, per year in totally passive, tax-free compounding income, which is exactly the kind that you want to have if you want to be free to, earn money and like not have to put in the time later down the road to earn that money, and just take that money and you can reinvest it, you can spend it, but basically you don't have to go and sit at a desk to earn it. So that's exactly what we're here for, guys. If you like this video, thank you so a lot for watching, and I hope to see you in the next one, where we're gonna deposit a little bit more money, buy a little bit more stocks, and see what we can do. So cool. I will see you in the next one.